The current remittance basis is beneficial for an individual who is a UK resident but a non-UK domiciled, who has been in the UK for less than 7 years. This is because for this individual, they will not pay any UK tax on their overseas income or gain as long as they don't remit them to the UK. And even if they decide to remit some of them to the UK, they only pay UK tax on the amount that they've remitted to the UK. This is beneficial, but this is going to change in the upcoming autumn statement by the Labour government. Are these changes going to be beneficial or are they going to be detrimental? Join me today as I provide you with the details of who a non-UK domiciled is, their current tax position in the UK based on the current tax rules, the proposed changes that is going to be indicated in the upcoming autumn statement, or the proposed published changes by the Labour government, and what you need to do whilst you await the autumn statement. My name is Amma, a chartered accountant with over 10 years of experience from AB & Co Accounting and Tax Services Limited. So who is a non-UK domiciled? A non-UK domiciled is basically a UK resident who has their permanent home outside the UK for tax purposes. Currently, if you are a UK resident but a non-UK domiciled and you meet these two criteria, you don't pay any UK tax at all. These criteria are: 1, if your overseas income or gain is less than £2,000, and 2, if you don't remit them to the UK. So if you meet these two criteria, you don't pay any UK tax at all. However, if you fall outside these two criteria, which means you don't meet them, you have a choice of how your overseas income or gain will be taxed in the UK. These choices are: 1, a rising basis, and 2, remittance basis. A rising basis basically means you will pay UK tax on your overseas income or gain as and when they arise. Remittance basis, on the other hand, means you will pay UK tax on your overseas income or gain you remit to the UK. For example, if you have 5,000 overseas income or gain and you remit £2,000 to the UK, under the rising basis, you pay UK tax on all the £5,000, whether you bring it to the UK or not. But under the remittance basis, you only pay UK tax on the £2,000 you brought or you remitted to the UK. So these are the two ways this individual can choose to be taxed in the UK. But remember, if you are a UK resident but a non-UK domiciled who has overseas income or gain of £2,000 or more, and you choose to be taxed under remittance basis, and you have been in the UK for more than 7 years, you're going to suffer what is called a remittance-based charge, starting from an amount of £30,000 going up to a maximum of £60,000. The Labour government is going to abolish the remittance basis in the UK and replace it with what is called resident-based regime from 6th of April 2025. According to their proposal, if you are a new arrival in the UK, you will benefit from a 4-year tax-free regime, which means if you are coming to the UK for the first time, you can remit all your overseas income or gain to the UK within the first 4 years and you will not pay any UK tax on them. This is the good news. Also, for an individual who was previously a UK resident but left the UK and returning back to the UK, as long as you have been a non-UK resident for more than 10 years, if you return back to the UK, you can also benefit from a tax-free 4-year regime that will be introduced from 6th of April 2025. How about an individual who is currently claiming the remittance basis living in the UK? For this individual, for capital gains tax purposes, they are going to be taxed in the normal way. But the Labour government is proposing to introduce what is called rebasing. So rebasing basically means they will rebase the value of your overseas capital assets at a particular date. So for example, if they decide that the rebase date is 6th of April 2025, then the value of your capital asset as at that date can be used for calculating the capital gains tax when you sell that asset instead of using the original cost. This is also beneficial because at the rebase date, if the value of your asset has increased, your capital gains tax is going to be reduced because the gain will be reduced. The Labour government has also said in their proposal that for overseas foreign income or gain that arose before 6th of April 2025 will continue to be taxed in the normal way for a non-UK domiciled but a UK resident. In addition to that, there's going to be a relief, which means if you are a UK resident but a non-UK domiciled, with this introduction of the new proposed change, you will be taxed under the remittance basis for all your assets that arose before 6th of April 2025. In addition, you will get a relief to reduce your tax, which is also a good news. However, they haven't indicated the date for the rebasing and the amount of relief this is going to be and how long the relief will be there for this individual. And they have said that all these details will be indicated in the upcoming autumn statement. After the autumn statement, we will provide you with all the details in our next video. So remember to subscribe and don't forget to hit the notification bell so that you'll be notified anytime we upload that video. These are the proposed changes by the Labour government expected in the autumn statement. What do you need to do as you await the autumn statement? You need to visit your tax advisor and establish your current position so that you'll be able to navigate the rules in a way that will be tax beneficial. I hope this video has been useful. Thank you for watching. See you soon.